The AI chip trade is cracking right in front of us today, but smart money isn't going to cash. They're completely changing their playbook. Semiconductors are getting obliterated, but the average stock is actually holding up in the green, because institutions are taking their massive tech profits and rotating directly into defensive safety like healthcare and physical infrastructure like transports. Today, I'm going to break down the semiconductor crash, show you exactly why healthcare and real estate are catching a massive bid, and then we will dive into the charts to look at the exact transport and logistics setups my individual stock screeners have just flagged. The Nasdaq seems to have made its decision. We've had another bearish close in the cloud and below diagonal resistance. Lagging span is also below price, and we've had a negative close of minus 1.64%, with the biggest reason for the drop being semiconductors. Price is fully closed in the cloud, marking a turbulent zone, and lagging span is below price, with a close of minus 4.46%. The cloud, however, is still bullish, and we can see a negative cloud coming in the next few weeks. And if we break the neckline, the bearish target would be around 20% drop from the neckline. And while the Ichimoku system requires some trading data to be able to chart this, we can immediately see Dram is bearish, with lagging span being below price, future cloud looking like it wants to turn bearish, and price being below the Kijun and the Tenkan line. The biggest holdings in that ETF would be Samsung, Micron, and SK Hynix. We broke down Samsung in a previous video, and the bias there hasn't changed. Micron closed in the cloud today, with lagging span also being below price. We can also see it doesn't show any bullishness, as it's rounding out at the top and flat here at the neckline. For completeness, this is the Kospi index, where 42% of it represents SK Hynix and Samsung. It looks similar to those individual charts. We are fighting around this neckline, closing below it again. We've had a bearish twist, and lagging span is below price, and price is below the cloud, and the 1-to-1 move projects a 24% drop. So things are not looking great in the Korean market, with reports coming out of how bad SK Hynix are doing. This marked the first time in over a month that it fell below 2 million Korean won. The decline rate was the largest in over 30 years since its listing in December 1996. Today, ASML Holdings posted their earnings and posted solid second quarter 2026 results, with the top and bottom lines improving year on year, up about 98% year over year, and they now expect 2026 total net sales to be between 43 billion and 45 billion, with a gross margin between 54 and 56%. And despite that, it hasn't really had a good day. The market looked at ASML's enormous multi-year equipment backlog and read it as evidence that capacity is being built and pulled forward faster than end demand can absorb. That is the fear of overcapacity, but really it's giants like SK Hynix pulling down the market with it. The one-day performance shows that there has been institutional rotation towards healthcare, real estate, and the consumer defensive sectors, which reflects what I have seen on my screener as well. And you can see technology here bleeding at minus 2.29%. But I think for healthcare we are seeing slower rotations. IHI is the only one that flagged up on my screener, but the relative volume was low, indicating that there's some slow accumulation going on here. And real estate looks like it's breaking out over a 1300-day base, with everything being bullish on the cloud on the daily. HDV also caught a bid today and looks like it's breaking out. A close above the neckline, a bullish cloud, lagging span above price, and price above the Tenkan and the Kijun lines. However, the projected move is not that large, and it would be far better to look for setups in the individual constituents, with Philip Morris teasing a breakout, as mentioned in my previous videos. So it looks to me like capital is in fact hiding in defensive sectors because of geopolitical risk and potential oversupply in the AI sector. My individual stock screener is flagging up a few stocks in the transport sector, which shows capital is moving away from digital supply chains and moving on to physical supply chains. EXPD is a stock that came up a while ago. It looks like it still has a bit to go. CHRW was also mentioned previously, but I think now that we've cleared these highs here, you can treat it as a base breakout with a potential decent move here. But lagging span above price, we've got a bullish cloud pointing up, and we've got both the conversion line and the baseline pointing up as well, indicating strong momentum. UNP, looking at the weekly chart here, as this is a breakout from 2022, and while the breakout has already happened, there is still a decent move in it left, which is supported by the Tenkan and the Kijun both pointing up. And I don't think it's too late to buy, but just have to set a decent stop loss, as you would be a little bit late on the entry. Alternatively, you could wait for the price to close below the conversion or the baseline and cross back up above it for your entry. JBHT broke out as well, on significant volume, and lagging span is above price. However, the target isn't that far away, but to combat this I would just size up. So there's also Canadian Pacific as well, which has broke out from levels not seen since 2024, with a decent move left in it. Lagging span is above price, price broke out above the neckline, we have the bullish cloud, and price is above Tenkan and the Kijun lines. Despite the mags closing bearish today, Apple is seeing some follow through on its breakout, proving that people are looking for some kind of safe haven today. And I mentioned this as a trade potential earlier in the week. If you found any value in this video, please like, comment, share, and subscribe.